Well, it's a perfect day to start your Monday morning when you have Madhusudan Kela decoding the importance of budget for you. To understand the implications of that in terms of short-term, near-term and long-term impact, and what is the tone and the tonality of the budget which all of us should really focus on. I mean, the consumer is feeling on the moon, fiscal deficit is coming under control. Are these the right things which one should focus on rather than focusing on the global noise in terms of tariff and whatever is happening in the other parts of the world? So Madhu, what a delight. Our viewers couldn't have asked for anything more that on a Monday morning, just before the market opened, they get to hear your thoughts. Now that markets have digested the budget, now that you and your team have combed through the fine print, tell us the big headline which investors should focus on.
Yeah, Nikunj, good morning. As always, a real pleasure to be with you early morning. Nikunj, I think it's a very progressive, very pragmatic budget, because it's a rare combination wherein they have, adhered to fiscal deficit, rather exceeded market expectation in terms of fiscal deficit. Also, they've given roughly 1 lakh crore rupees in the hands of consumer. And mind you, this 1 lakh crore rupees is like equity in the hands of consumer, which will get further leveraged. Someone will buy a house, so EMIs, he will be able to afford more, or someone will do some kind of a capex on his own. So this roughly 1 lakh crore rupees of tax relief which has come, this is really big. I don't think anyone in the market was expecting the slabs to go to 12 lakh rupees. So it's come as a really good positive surprise. Then the other thing, Nikunj, which is being spoken in the market, it is about capex. So the way, even though the headline capex looks like it has a growth of 10%, but if you dwell deeper and if you include the grants which are being given to state government, which is also directly indirectly a capex item only, but it is done by the state government, then the overall number comes to 16% growth in capital expenditure. So you have 16% growth on capital expenditure, you have roughly 1 lakh crore rupees given in the hands of middle class and the consumer, but at the same time you have adhered to fiscal deficit target. Rather, you have gone even better than what the market was expecting. So I think it's a very, very good combination of factors. Then the other point which I would like to mention, Nikunj, when we dwell deeper, in fact there are very, very good things which are being done for various sectors. Like just take for instance the credit guarantee which is being enhanced both in terms of number of years and also in terms of quantum. Then there are finer details in terms of what they have done for National Manufacturing Mission. If you go in detail into that document, these headline number, some of it get covered, but some of it doesn't get covered. You look at what they have done for even toy industry, for leather industry, for renewable. So there is a very strong focus on growth and on strategic sectors which can actually aid to the growth.
What about budget assumptions? Up until now, the hallmark of Madam Finance Minister has been that she's been very conservative with her assumptions. But the fact that they are assuming the economy to grow in double digit nominal and also expect a 14-15% surge in tax collections, do you think that could get challenged looking at the global backdrop?
Nikunj, we have to go by the past track record of the government and the finance minister. They have never been very aggressive. Rather, whatever number they have said, at least in the last 10 years I have been observing of this government, they have by and large adhered to. You can question some assumptions here or there, but I think these broad numbers are in line, and I am quite confident that the broad numbers of this 4.5% fiscal deficit will get achieved. The whole 1 year is there to pass, Nikunj. many things will happen which we are not expecting, both positive and negative. Like last year, no one was expecting the personal taxation to have the jump which it had had. So I think government will achieve these numbers, and there doesn't seem to be very aggressive estimate in any front as such.
Although post 2021, the government went on a binge spending on capex, and the Build India theme started coming back. Defense, shipping, railways, roads, infra. Post this budget, do you think Consume India theme will be a popular theme now, and one should pivot from Build India stocks to Consume India stocks?
Now, I would say you have to be very selective, Nikunj. In this year, let's say coming to market, if you look at a lot of large cap companies have not performed at all in the last 2-3 years, including a lot of heavyweight private banks. The larger companies have not performed. So, and there is still some earning expansion. Markets are trading close to 18 times Nifty for next year, which by no stretch is any expensive. If I take even a last 10-year average for Nifty valuation, it's been around 19 times. So markets are trading at around 18 times if you take the growth numbers. So I would say this is going to be a market wherein you have to really do a lot of bottom-up work. It will be a lot of stock-specific markets, and I think given a lot of noise even globally, there will be more volatility than what we have seen in the last 3 years. So my clear message is, let us not extrapolate the returns which we have made in last 3 years. So this will be kind of a range-bound market, 25, 26, but because of the volatility, you will get a lot of interesting opportunities and a lot of interesting price points to get in. So anyone who is prepared and who has a conviction on the longer term India story will be able to invest very wisely, and I think there are returns to be made on a stock specific basis for this year.
Madhu, the number which in a sense is more like a freebie for everyone is that 1 lakh crore of tax cut which comes back into the system, and that will have a multiplier effect. How do you see that 1 lakh crore which comes into the hand of consumer or taxpayer in this case could come back into economy? Will it be FMCG? Will it be white goods? Will it be hotel? Will it be low ticket items? How do you see that space moving?
So the whole consumption basket, even though Saturday market was open, market has given kind of its verdict. Nikunj, if you just think about it, in a middle class family, if there are 2 people who are earning, so it's roughly a 2 lakh rupee benefit to the middle class consumer. And that again I emphasize is unlevered. So this will boost, along with the capex, this should boost the overall economic growth. The ranges are between 0.5% to someone saying even 1.5% boost to the overall GDP growth rate of India, given what all they have done in the budget. So it will definitely boost the consumer sentiment, and variety of consumptions would happen. And the biggest squeeze in India, which we have seen for the last 2 years, was on the middle class, because you have seen inflation go higher and the wages did not go in line with the expenditure. So this has come as a really good relief. And I once again emphasize, Nikunj, I don't think everyone was expecting that there will be some increase in the slab. But I don't think anyone in the market was expecting it to go to 12 lakh rupees. And 1 lakh rupee per person kind of advantage come in a year in a middle class family. This is big, at least something which we have not seen in so many years in India. This is bold.
So Madhu, before the budget speech, you said the following: दिमाग कहता है कुछ नहीं आएगा, दिल कहता है कुछ आएगा. अब तो दिल और दिमाग दोनों खुश है.
Yes, एकदम बिल्कुल निकुंज, we are so bang on. And निकुंज, मैं आपको एक लाइटर वे में बोलता हूँ, this is the first time कि अपने जेब से चवन्नी निकाला नहीं इन्होंने. Even from people like us, right? They have given something to every person. So there is no reason to be unhappy about this budget. It's a very, very good, fine act of balancing consumption, capital expenditure while keeping the fiscal deficit discipline in mind.
So Madhu, you've always said that aligned with the government thinking. So one is consumption, second is focus on renewable, rooftop, solar, startup India. So in terms of the new messaging to new sectors, what is that message in the budget, Madhu, according to you? Was the line there? Oops, just when I thought I had a question there, I think we've disconnected. And are we getting him back? We should get him back in a minute or so. Okay, just one of those bad lines. Okay, Aisha, just such a, before budget when we were talking to Madhu and he said, Aisha, the following. Dil kehta hai kuch aayega, dimag kehta hai kuch nahi aayega. And now it's really the other way around, which is that dil and dimag dono kehta hai kuch mila hai. I mean, logically think about it. Like Madhu said, Vallabhbhai was saying that for an average Indian household, if it is what we say as a double income household, if a couple is earning 25 lakh rupees, you don't pay taxes. Something unheard of, right? I mean, a lakh rupees saving here, a lakh rupees saving there. And when I'm, making this point, even our flow managers are looking at us saying, because, how is this possible? Because in India, we've always heard of two things. Taxes, they go higher. Inflation, it always impacts you. It's for the first time the other way around in terms of, how the positioning of the market is. So, Madhu, ultimately markets are about earnings and macro stability. Has this budget done enough to boost the earnings and keep the macro stability on? What happens today, tomorrow could be Trump, it could be tariff, it could be something else. But in general, do you think this budget now will give India a different kind of an pedestal positioning both in terms of macro and the earnings trajectory?
I think earning trajectory will definitely improve as compared with what it was even before the budget, Nikunj. And I would say that, this estimate of GDP growth rate going higher because of the budget, anywhere between 0.5 to 1.5%, as per various estimates. This will clearly have earning boost and it will be visible maybe 2 quarters down the line. It will certainly not be visible immediately. But I think in the second half of 2025-26, when you will have a real impact of whatever they have done. But there are very, very good finer details. So it will be interesting to watch a lot of companies. And Nikunj, I also want to mention one thing on this trade war. Right? Trade wars are never good for the world by and large. But if you look at it, like what happened when the tariffs were being put, and it was China plus one story. If India escapes this trade war, so there could be a lot of interesting opportunities for some businesses in India and some select companies. Like, let's say $1.4 trillion worth of global trade has been hit by tariff. And if there are no increases in tariff in India, which is what the case looks like at least as of now. So I would see that there will be some interesting sectors and companies which will benefit out of what is going on globally.
So Madhu, I know you have to get back to your desk and we are 3-4 minutes away from the market open. Can one assume, and this is for crores of our viewers and millions of investors, that the huge event risk, which is that whole uncertainty in and around budget, that is over? We've come on the right side of the budget, and now this market surely becomes a market you want to buy on decline rather than sell on rise?
I would say so, Nikunj. I would say that, this is again, I will emphasize, please do not extrapolate your returns of last 3-4 years, which has been fabulous. This is a year where your bottom up work will be most important. There will be opportunities selectively, but you have to have moderate return expectation in this kind of markets. And clearly, it could have been worse kind of an event, but it was not. It was a very good outcome from the market perspective, and the government and the finance minister has actually delivered, I would say, better than what the market was expecting before the budget.
With one fine point, Madhu, trade wars are real. Do you think it could affect exporters, IT, manufacturing, anything which has got to do with exports now? Avoid those stocks. Anything which has got to do with consumption, internal, growth. Focus back on that.
But Nikunj, that doesn't look like, unless you have a tariff being slapped on India and Indian companies, I would argue, yes, globally it is not a good thing at all, that there is a trade war and there is a protection all around. But from an India perspective, I can see that this will be an opportunity. Like if an Indian company was exporting something which has got a 25% tariff, and it is replacing some goods from Canada or Mexico or China, that logically should benefit. But let's see how it plays out, over a period of time, and we'll get to analyze more. And I will come back to you specifically on this. But intuitively, I don't think it is going to be very bad for India.
30 seconds before we wrap, Madhusudan Kela, do you think this whole FI selling and the weakness in rupee is slightly overdone, because FI selling and rupee in weakness is nothing to do with macros of India? It is what is happening to the world in terms of the dollar strength adjustment. Are those extremes? Do you think FI selling and rupee weakness is extreme?
Nikunj, we will have to watch that. Clearly, I am not a global economist, but this dollar strength still is there. Your DXY is still 109.5, 109.5. So dollar strength is there. Let us just watch the market over the next few weeks before we conclude that FI selling is over. I would say they should, in normal circumstances, they should have been very enthused by the headlines of this budget. But because of what is going on globally, we'll have to watch how this FI selling plays through.
Madhusudan Kela, really appreciate your time. Thank you for coming early to your office and really joining us on the channel. You've certainly made our Monday morning, and thank you for your valuable advice just before the market opened. Madhusudan Kela saying that this is a progressive budget. It's a budget which has ticked all the boxes. They've not rocked the fiscal board, but yes, addressed in a very prudent manner what needs to be done in terms of reviving the consumption wheel. So 30 seconds to go, Aisha. I think it's less to do with budget, it's more to do with what's happening in the world, which really could influence the script of how markets would move perhaps for the next couple of hours. Aisha?